Hello everyone, welcome back to FxPro's weekly market roundup. From crypto lulls to major market movements, we've got a jam-packed update for you. Let's dive in. Over the past week, we've seen the dollar climb against many of its competitors. Now, this isn't exactly a surprise. Remember that boost we saw around mid-July? Well, it's continuing that trend and even picked up some momentum towards the end of last month. The US dollar is being supported by a robust job market. And internationally, well, things seem to be a bit rockier in other countries than we initially anticipated. Given this backdrop, it's no wonder the dollar is shining bright right now. And here's something interesting. The dollar index has bounced back to levels we last saw in March, which is right before the banks faced some challenges. It's approaching a critical range, and next week is going to be a big test. Curious about what events might influence it? Stay tuned. We'll dive deeper into that towards the end of the video. Now, let's talk gold. Since we hit September, gold's been feeling a bit of heat. Remember when it touched $1,950 at the start of the month? Well, that move seemed to get the attention of some sellers, and by last week, the price had dipped down to $1,915. For all you gold enthusiasts out there, you'll know that August and September are usually pretty pivotal months when it comes to setting new trends for gold. And right now, technically speaking, we're seeing gold prices hovering around some pretty significant long-term trend-supporting levels, right at the 200-day moving average. It's like gold's safety net, and that's where buyers are stepping in. But the big question is, how long can this support last? If gold can stay strong here, we might just be on the verge of a pretty impressive bull market. Let's dive into what's been happening in the American market lately. It's been a bit tense, to be honest. What's intriguing? Some of our market champions from the past few months, I'm talking about big names like Apple and Nvidia, they're seeing a bit of a reversal. Apple's dropped by over 8% from its peak. Nvidia, it's taken a 6% hit. Meanwhile, everywhere you turn, there's talk about the AI bubble starting to lose some air. It's an interesting time, and we'll be watching closely to see how this unfolds. Now let's talk oil. Brent crude has been soaring, going past the $90 mark. And US-grade WTI is not too far behind, reaching as high as $87 a barrel. We haven't seen those levels since last November. In fact, oil's been on a bit of a roll, rising in 8 out of the last 10 weeks and jumping a whopping 30%. With this surge, you've got to wonder, are we gearing up for another big price rally? The million-dollar question: how are the big decision makers in the world's wealthiest nations going to react? Could the US potentially dip into its reserves again, or maybe boost production? And with all this going on, could we be seeing more interest rate hikes on the horizon? Or just maybe, will the officials decide it's best to sit back and let this one slide? So many questions, and all eyes are on what's going to happen next. Summer's been a bit quiet on the crypto front, hasn't it? Bitcoin has been hovering around the $26,000 mark for almost a month now. There were a few moments when it seemed like things might shake up, but every time Bitcoin finds its way back to that familiar zone. It feels a bit like crypto is watching the stock market and political events, kind of like a mouse eyeing up a snake. On the technical side, if we're looking long-term, things are leaning a bit bearish, especially with the exchange rate trading below that 200-week average. It's going to be interesting to see where we go from here. Buckle up, because the upcoming week is packed with some major events that every trader and economist will be keeping an eye on: the US Consumer Price Index and the ECB's decisions and comments. Remember when the CPI report was kind of, predictable? Well, 2022 threw that script out the window. The market's response to this report has lately gotten more buzz than even job numbers or interest rate decisions. Watch out for it on Wednesday at 12:30 GMT. We saw a price growth jump from 3% in June to 3.2% in July. And even though the Fed's aiming at a 2% inflation rate, they've been struggling to hit that target. If inflation spreads up even more, we might see another rate hike by the 1st of November. Great for the dollar, perhaps not so great for stocks and commodities. Oh, and with that 25% spike in oil prices since July, expect some twists. Then, on Thursday at 12:15 GMT, get ready for the ECB's interest rate announcement. And just 30 minutes later, the press release that might send the euro on a roller coaster ride. Here's the thing, the Eurozone's economic engine is cooling down, and that could be a reason to hold off on rate hikes. But inflation is still a headache. And if we go easy on it for too long, the later fix might hurt even more. The ECB might bump up the rates now, but play it by ear moving forward. In simpler terms, more rate hikes might be on the horizon, so all eyes are on the euro. Will it bounce back after its 2-month slip against the dollar? Let's see. And that's the scoop for now. Remember, markets move fast, but knowledge is power. Stay informed and see you next time.